Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Ryan Nauman, market strategist at Zephyr, to discuss asset allocation and the type of companies that investors should be focusing on in this environment. Ryan, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill, for having me.
All right, you got it. And this certainly has been a market where you want to focus on stock selection. What type of companies are you looking at?
That's a great question, Jill. And my primary focus right now is focusing on companies that are resilient to a economic slowdown or even an economic recession here in 2023. And that pertains to high quality names that have solid a balance sheet, solid cash flow, free cash flow, and have consistent dividends. They pay consistent dividends and even raise dividends. Dividend paying stocks have performed, relatively much better than the broad market this year. So focus on those high quality names that can be resilient to an economic slowdown, such as consumer staples, more defensive names, potentially even utilities for those really conservative investors. But focus on high quality names that pay dividends, such as consumer staples.
And Ryan, if you're still cautious and going all in equities, you suggest using strategies like dollar cost averaging. Explain to us why it is important to employ such a strategy.
That's a great question, Jill. So right now, there's so much uncertainty out there, and there's a lot of volatility. Even after last week's fantastic rally, there's still a lot of uncertainty out there with the Fed, and with that comes volatility. You can't jump in with both feet right now. You still have to remain conservative, but you don't want to stay in cash. So slowly take that cash off the sidelines, or invest slowly in chunks. Take your money and don't put it all in at once. Buy at the bottom, or maybe come up with a strategy where it's at a weekly basis or a monthly basis, and invest a certain percentage of your cash, so you're not going in all at once and potentially feeling the wrath of a sell-off. So slowly invest in, you might purchase at the bottom or some dips, as well as at the top, but it's just too much uncertainty right now to go all in with their cash.
And of course, everything's predicated around what the Fed is doing in its interest rate policy. We're starting to see inflation data tick down a bit, which is a positive thing. So I guess the question is, do you think markets have bottomed at this point? And what do you need to see from the Fed and from macroeconomic data to get you more comfortable with the market?
Fantastic question. So as we learned last week, the Fed is the only game in town. After the CPI print, we had a fantastic rally in equities, and that's going to continue. And the primary player right now, along with the Fed, is determining what factors will help determine the Fed, or have the Fed slow its pace of interest rate hikes, either slow or maybe even better yet, pivot to stopping its interest rate hikes. So those factors that I'm really focusing on, you mentioned it just now, is inflation. We need additional material slowing inflation. Last week's inflation print was a great start. We need another print in December that shows it's slowing in further. The other one is a more balanced labor market. Chairman Powell has said this: more pain is needed. We need a higher unemployment rate that stabilizes or gets the labor market more in balance, brings down wage growth. Stabilizing or a slight downturn in yields, have yields come down. Higher yields, it's not just higher yields, but it's the pace that yields have climbed that have really rattled equities. So more stabilizing bond yields. US dollar, we've had a steep strengthening or steep incline in the US dollar. We need that to stabilize, to help stabilize the global financial conditions. And finally, upward revisions of 2023 earnings forecast. We've recently received some downward revisions. We need earnings forecasts for 2023 to pick up. Those are the things that I'm looking for to determine if we've hit bottom and we're well on our way into a bull market.
And Ryan, when we think about longer term, I keep hearing trends about transition to green energy, electric vehicles, cybersecurity, building Web3 and the metaverse. What kind of sectors would you look towards if you have a longer term mindset?
Fantastic question. I'm looking at technology, just like you said, the broader sector technology. And for longer term investors, technology has been hit really hard. There's no secret about it, but that provides a fantastic opportunity for those longer term investors that you just mentioned to get into technology, or more, maybe even consumer discretionary names that are beaten down, that are historically very expensive. This provides a fantastic opportunity to buy some high growth names at a cheaper valuation.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.